You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Welcome to the Deep Dive. This is where we take a whole stack of information today. It's a really comprehensive global markets and geopolitical briefing, and we basically distill it for you.
Yeah, down to the essentials.
Exactly. The most important insights, maybe some surprising facts, and definitely those, aha moments that actually make you feel informed.
Right.
Our mission today: cut through all the noise out there and give you a shortcut, kind of a direct line, to understanding the big currents shaping things right now.
And there's a lot to get through, definitely. Our sources are showing a world that's constantly shifting, sometimes pretty unpredictably.
So what are we covering?
Well, we'll be navigating quite a range, everything from this really unusual standoff between the White House and the Federal Reserve.
That sounds big.
It is. And then there's the whole intricate dance of global trade talks, furniture tariffs 1 minute, palm oil exemptions the next, plus those persistent geopolitical tensions across several continents.
Okay.
So the goal is really to connect those dots for you, explore what actually matters from this briefing, and help you see not just what's going on, but crucially, why it's significant.
Okay, let's unpack this then. Starting with, I guess, the biggest story right out of Washington, the one really making waves.
You mean the clash between President Trump and the Fed?
Yeah, exactly. The briefing gets into President Trump announcing he was firing Fed Governor Lisa Cook, which is already major news.
Right.
But what makes this, well, honestly kind of astonishing is that Governor Cook is refusing to step down.
She's challenging it legally.
Yes,
Yeah.
challenging the decision in court. So you've got this legal battle brewing executive branch versus the judiciary and, implicitly the whole idea of an independent Fed.
And what's really telling here is just how immediate the impact was. You saw it straight away.
In the markets.
Absolutely. It sparked these significant concerns about Fed independence. I mean, the whole institution is designed to be apolitical, right? To make decisions based on economics, not politics.
So markets started questioning that.
Exactly. Questioning how much political influence might be creeping into monetary policy. This isn't just like a political drama. It's a fundamental challenge, a real stress test for the Fed's credibility.
Wow. So the insight isn't just the politics,
It's how quickly that deep-seated trust in institutional independence can, erode. It creates a whole new layer of systemic risk that maybe wasn't priced in before.
And you saw those ripple effects directly in the currency markets, didn't you? Almost instantly.
Oh, yeah. The dollar, it gave back quite a bit of ground against other major currencies.
And the beneficiaries were?
Specifically, the Swiss franc and the Japanese yen, classic safe haven demand. Investors basically looking for stability, for security, when things feel uncertain politically in the U.S.
Right. They flock to perceived safety.
Precisely. It just shows how fast these big political events can translate into, actual market movements, pricing in that perceived risk to institutions.
And zooming out a bit, this Washington earthquake, as you called it, it seemed to ripple out across the whole currency landscape.
It really did. And it highlighted other forces already at play. Take the euro, for instance. It stayed pretty heavy.
Why was that?
Well, partly French politics. That's adding its own layer of uncertainty over in Europe. Meanwhile, you saw sterling kind of steady itself a bit.
UK traders back.
Yeah, UK traders returning from holiday seemed to bring a little localized calm, helping it stabilize against the dollar's volatility.
And what about Asia?
Interesting dynamics there, too.
Yeah.
The Australian dollar, it initially jumped. They had stronger than expected inflation and construction data.
Which normally would be good news for the currency.
Right. Signals of maybe a healthier economy, perhaps rate hikes down the line. But it couldn't hold on to those gains.
Global uncertainty maybe overshadowed the local data.
Seems that way. And then the yuan fixed, China's daily reference rate. That was, again, set stronger than the market expected by the PBOC.
So these aren't just random movement.
Not at all. They're all subtle, but, quite significant indicators, showing how global economic health and investor feeling are reacting to both local stuff and that big drama out of Washington.
Okay, let's shift gears. Commodities. Always a good place to check the pulse of global demand, right?
Definitely. And there were some intriguing movements.
Like oil. Prices eased a bit, I saw.
Yeah, they dipped slightly. There was a crude stock draw, but it was pretty modest. Came in below forecasts, suggesting maybe demand wasn't quite as strong as expected.
But the real headline grabber seemed to be a prediction.
Oh, yeah. President Trump predicting crude could fall below $60 a barrel.
Yeah.
That got a lot of attention.
And Goldman Sachs weighed in, too.
They did, adding some serious weight to that sentiment, forecasting Brent crude could reach the low 50s by late 2026.
Wow, low 50s. That's quite a long-term call.
It really is. And it raises a critical question for us,
Yeah.
What does that kind of forecast from a major bank alongside a high-profile political prediction tell us?
About future energy demand and supply.
Exactly. And maybe more deeply, what does it say about the sheer power of, well, political statements to actually move market sentiment?
Like a prediction itself can shift expectations.
It absolutely can, especially from someone like a former, maybe future president. It's not just an opinion. It can create market expectations even before the fundamentals really change. And for Goldman to project low 50s long-term suggests a pretty big reevaluation of demand drivers.
Maybe thinking about faster energy transition or efficiency gains.
Could be, or even just sustained global economic sluggishness. It's like a window into how they see the whole energy landscape evolving.
Okay, and gold. It reacted to the Fed news too, didn't it?
Classic safe haven move. It surged, got close to that $3,400 mark, mostly on those Fed independence worries we talked about.
Showing its traditional role in uncertain times.
Precisely. But then, as the dollar found its footing a bit and the initial panic seemed to cool off, gold pulled back from those highs.
And copper, industrial metal.
Copper just sort of drifted lower. More range-bound trade. It seemed less affected by the immediate political drama, maybe more tuned into broader industrial demand signals, supply stuff.
So the takeaway with gold is how fast it reacted.
Yeah, just how quickly it acted as that crisis hedge, and then how it stabilized as the shock sort of eased, temporarily at least. It really reaffirms its unique place.
But you mentioned supply risks remain important.
Always. And often underestimated, I think. Look at Latin America, for example. Chile's mining regulator added new, quite strict requirements for restarting parts of Codelco's big El Teniente mine after some disruptions.
That sounds specific, but maybe has broader implications.
Exactly. It's not just a local issue. It highlights how problems at one major mine in a key copper region can keep those global supply-side risks firmly, in focus. Things like regulations, labor issues, even whether they can ripple through supply chains, even if daily prices seem calm.
Okay, so connecting all this, what does it mean for global trade? That's always a flashpoint.
It certainly is. And we saw more signs of that. President Trump pledged new tariffs on furniture, saying they'll be very substantial and implemented quickly.
A direct warning shot to a specific industry.
Yep. Signals a continuation of using tariffs as a go-to tool.
But at the same time, didn't he say some deals were done? EU, Japan, South Korea?
He did state that, yes.
Oh.
But almost immediately, South Korean officials added a really important clarification.
Oh, what was that?
They noted that, further details still need to be ironed out, particularly around nuclear energy cooperation.
So the devil's in the details.
Very much so. It just shows how complex these international agreements really are. A public announcement isn't always the final word. What might be politically convenient to call finished still needs a lot of granular work by the experts.
Meanwhile, there's a big meeting on the horizon this week, right? U.S. and China trade reps.
Yes, due to meet in Washington. And the core issue, again, is trying to reduce China's large trade surplus with the U.S.
That's a long-standing issue.
It is. And a critical discussion. Could really impact global supply chains, economic ties, especially given the whole strategic competition backdrop.
But it's not just the U.S. and China, is it? Other trade movements happening.
Definitely not just the big two. In North America, you're seeing signs of de-escalation. Canadian and U.S. officials are set to meet again after Ottawa removes some tariffs.
A positive step.
A constructive step, yeah. Shows a path forward. And further south, Brazil confirmed that Mercosur, the South American bloc, and Canada will restart free trade talks in October, aiming for new partnerships.
Any other bright spots?
Actually, yes. A particularly positive note from Southeast Asia. Indonesia's trade negotiator announced Washington has agreed, in principle anyway, to exempt key things like palm oil, cocoa, and rubber from U.S. tariffs.
Oh, that's significant for them.
Hugely significant. Crucial relief and stability for those industries, which are vital to Indonesia's economy. Shows that targeted diplomacy can still achieve wins even when the broader picture is complex.
Okay, shifting focus again. Geopolitics. Another layer of tension, it sounds like.
It remains high across multiple regions. Adds another complex, often unpredictable element to everything. These aren't separate issues either. They can definitely pull on each other.
Starting in the Middle East.
Right. U.S. Envoy Stephen Witkoff mentioned Washington is actively negotiating multiple entries into peace accords with Israel. So a diplomatic push seems underway.
And President Trump is involved directly.
Set to chair a White House meeting on Gaza this week. Signals high-level focus. But on the ground, the situation is still incredibly tense.
How so?
Well, Hamas disputed Israel's claims about militants killed in that recent strike on Gaza's Nasser hospital. It just starkly shows the deep disagreements, the conflicting stories that persist. Makes any path to peace really, really challenging.
A big gap between diplomatic hopes and the reality there.
A chasm, really. And what stands out is just that delicate balance, or maybe imbalance, between those high-level peace efforts and the ongoing, deeply rooted conflict. Every claim, every counterclaim just carries so much weight.
And beyond that immediate conflict, Iran.
Iran confirmed its continuing nuclear talks with European powers. But importantly, also warned against activating the deal's snapback mechanism that would reimpose a whole lot of sanctions automatically.
High stakes there.
Extremely high. And a really concerning detail that underlines this, the IAEA director, the head of the UN's nuclear watchdog, has apparently been placed under around-the-clock security because of threats from Tehran.
Wow. That speaks volumes.
It really does. Shows the potential for escalation, the severe consequences if these talks break down. A major risk for global non-proliferation.
Okay, turning towards Europe. Different kinds of tension there. Economic ones.
Yeah, interesting economic ripples. The EU is prepping emergency support for its aluminium industry, which is struggling.
Why is it struggling?
Because U.S. buyers have apparently been aggressively outbidding European firms for recycled metal, a crucial input. And it's forcing plant closures in Europe.
Competition for recycled materials, that's a new angle.
It is. Highlights how this whole circular economy trend, with intense competition for recycled resources, is creating new friction points in global trade, maybe reshaping industries faster than we thought. It's a surprising ripple effect.
In Switzerland, anything notable there?
Their central bank officials stressed they don't see deflation risks right now, which is good. But they also said they might intervene in currency markets if the strong Swiss franc threatens price stability.
So, keeping a close watch.
A very proactive, vigilant stance to protect their economy, which relies heavily on exports.
Okay, let's look at the bigger picture in Eastern Europe now. Russia, Ukraine, still very much ongoing.
Yes, and a complex mix there. U.S. Envoy Witkoff said Russia has made what he called a good faith effort to engage in dialogue. Suggests maybe some communication channels are open. But at the same time, President Trump warned that new sanctions could be coming if Moscow doesn't agree to a ceasefire. So the pressure is still definitely on.
And Ukraine.
Ukrainian officials are set to continue consultations in New York this week. Underscores the ongoing diplomatic track. But it really shows that constant kind of precarious tension between talking and the threat of more punishment.
Dialogue versus potential escalation.
Exactly. The key takeaway seems to be that while people might be talking, those fundamental demands for concrete actions, like a ceasefire, haven't been met. Leaves the whole region still very much on a knife edge.
So pulling all these threads together, what does this all mean for you listening in, trying to make sense of the daily news?
Well, I think our deep dive today really shows a world that's constantly moving, doesn't it? Everything's interconnected.
Yeah, you've got the fallout from that Washington Fed clash really echoing.
Right, and the complex, often tense, U.S.-China trade talks.
Plus these persistent geopolitical risks. Gaza, Ukraine, you name it.
They aren't just separate headlines. They're deeply intertwined. These are the key developments you really need to keep an eye on to understand the bigger picture and maybe anticipate what's next.
So this raises, I guess, an important question for you, our listener, to think about.
Yeah, definitely. Considering how intertwined all this is, political influence, market reactions, global security, how might just one unexpected event, say, in just one of these areas?
Like a breakthrough in the Middle East, maybe.
Yeah.
Or a sudden drop in oil demand.
Exactly. How might something like that create a ripple effect that dramatically shifts the other areas? What single piece of this whole complex global puzzle do you think has the most potential to really change the landscape in the coming months, and why?
Absolutely. Something to really mull over as you follow the news. Keep that question in mind. Understanding those connections, anticipating the ripples, that's how you stay truly informed.
Well said.
Thank you for joining us for this deep dive into the heart of what's shaping our world right now.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.